Thank you, Brock. It's always wonderful to be with you. And I guess I would encourage the folks that are joining us to please put your questions in. We'll certainly serve them up as they come in, and really want to engage you as much as possible. So, Chris, let's start off with something topical. Obviously, COVID-19 is very current. How do you see it changing the investment landscape at Lumina or just broadly? How do you see it?
Well, so for starters, I don't know enough. So at Lumia, we are actually very reticent. We have our second fund, we had our first close, and we've been quite reticent to place capital out of that fund because we don't think we know enough about it. We would put it that there's more we don't know than we do know. So when we look at the landscape domestically, our main focus is U.S. companies that want to go global, and we like to help them go global in what we consider the broader MENA, which includes Turkey and Southeast Asia and LATAM. Those are our focus, non-U.S. focus areas. And I think that the components that make that easy are at risk. We have different rates of infection in different places. Thank goodness there seems to be some leveling in the US. I think Turkey seems to have taken some good steps to moderate, and they also have a youthful population and a lot of hospital beds. So it's crisis, but not catastrophe. But those are just two spots out of 20 or 30 that we're trying to measure. And then when you look at primarily growth stage investing, which we do in the US, we have to consider public market comps as we back down to what we may pay for a SaaS business. And I don't think there's anybody who believes that with the unemployment we have right now and the devastation of the small business world, that you can accurately say that the market is reflecting that situation. I think it's instead reflecting massive government support, which, by the way, I'm not criticizing in any way, but it certainly has a frothy effect effectively on valuations, which when I'm trying to understand the real valuation in order to correctly price a Series B or C round, I don't think I have any correct way of sort of adjusting that right now. So just in terms of investments, we actually are frozen. Now, that doesn't mean other people are. I see deals right and left. I see deals that are built on the success in the current environment. That's hard to say whether that's long-term or not, so that doesn't interest me much. And then I see deals that are built on structure. Structure meaning this pref, that pref. When all of the conversation is around the term sheet as opposed to the business, I run for the hills. That's not a deal I want to be in. That's a great deal maybe for a distressed investor. Generally speaking, LPs do not allocate capital to VC for distressed investment expertise. There are plenty of hedge funds that do that beautifully. And I'm just giving you a few data points that impact us, but I don't think it's impacted the world overall. We've seen LPs in other funds renege on their commitments. That doesn't typically happen with endowments, but it has happened with global family offices in some instances where rightfully they're saying, well, wait a minute, we may have cash needs for our cash cow businesses, whether that's airlines, banks, hospitality. And so while this pile of money allocated to venture is fine to have, we're not going to continue with that, with funding those. And obviously they're selective. They're not going to pull back on a fund where they've deployed 90% of the capital call, that's too big a loss. But if it's a newish style fund, or if they don't have much in there, or if the fund isn't performing well, it's very much on the table still. And I don't think we're going to know where that's going to stop either, because a number of these sort of businesses that are part of family conglomerates are probably being supported by temporary measures also. And how long those temporary measures will last, and whether they're the time frame is coincides nicely with the end of this situation, don't know. And I know that's a bit rambling, so I'll stop. But that's some of our thoughts.
Yeah, no, that makes sense. And as you said off the top, it's a little hard to predict kind of where this all is going to go. Do you, I guess, within that constraint, do you see whatever sort of the post-COVID economic environment looks like? Do you see it at all shifting the types of companies that you're, or industries that you're focused on, or looking to invest in?
Probably not. When we look at deals in the US, we typically look at enterprise SaaS as a broad category. And I think that, so there's not a specific vertical in there. We're not excluding construction and supporting travel, or taking out cybersecurity and putting in something else. We look across that range. And so I think we tend to look at the more sort of Series B, C. We have data that can show, if any company is keeping their data correctly, and we wouldn't invest if they weren't, you can see some patterns around why customers use it, efficiency for customers, efficacy. And those are the things that you're betting on, whether they're in one industry or another. Now, I would say that we are nervous and monitoring the globalization versus not phenomenon that could be a result of this. There are very good reasons to revisit the idea of dependency on supply chains that are outside your country and therefore outside your control. And how that may come back and impact software is not crystal clear yet. In fact, it's very muddy, but it's something we have to try to look at. One, you see a lot of arguments that say the trend toward nationalization, which often is accompanied by a sort of leadership style, could have had a heyday in this crisis, but might have been weakened by this crisis, because there isn't great evidence that the leadership style, or at least the leaders who promote that leadership style in the biggest economies of the world, whether that's Trump or in Brazil or in Turkey or in some other places, Russia, are going to have massive success through this. In fact, it may have weakened them in certain instances. We don't know yet, but that will clearly have an impact on that. And when you're a firm that is bringing its specific value add to help companies go global, if there isn't really a globalization trend, that's not a good place to be.
Sure. Just a curious question, and obviously we're on a meeting platform today, Click Meeting, and there's Zoom and so on. Have those been interesting SaaS investments for you in that space?
We've seen a couple, but the ones that have been, when I see companies, and again, we've seen a couple, you either see valuation expectations that expect that this is the state of play forever, and or you see also rans that can put themselves in the same category as the winners, but are not the winners. And there is room for in almost every instance there is room for more than one player, but you're not going to find 20 players that achieve success, let's say, in the conferencing space.
Yeah. Oh, we actually just did obviously Zoom and Click Meeting are very specific in terms of what they're aimed at. We just did a complete survey of the virtual trade show space, and yeah, there are 30 platforms, and some are 20 years old and have very stable customer bases and all that, and others aren't even 20 days old, and they're pasting things together to sort of make it look good and kind of hoping to fake it through, and it's really interesting to see.
And I think it's important to think about these, and there's no doubt that patterns will have shifted and accelerated and been broken by a global pandemic like this. But the betting is that a vaccine will come. And, if it's a complete vaccine and it becomes available, which it seems at some point like it can become available globally, then it is sort of amazing how quickly people forget. I can't remember if I told some of this group when I spoke to them last, but when I was in the wireless business, the company that I was part of in the US, Nextel, had a public safety element to its wireless service with a push to talk. And so we were being courted by the Chinese just before SARS broke out to try to bring up a service there. And when SARS broke out, I had to, I was on the last plane out. Our corporate pilots wouldn't even fly there. Last Air Canada flight through somewhere with the head of the CDC and me. And so I was pretty deeply involved in the response and watched the crisis unfold. Now, while it was not as geographically distributed, it was pretty profound in cities like Hong Kong and Beijing. And the certainty with which people said, well, there go apartment living in Hong Kong was absolute at a point in time. And then, 3 years later, you're visiting and you're thinking, what is that amazing scaffolding over there? Oh, it's a brand new, taller than ever apartment tower. And, nobody was not buying it because of the fear of SARS. So we do tend to get past it. So when you talk about virtual conferences, for instance, or virtual trade shows, and I may be an exception because number one, I'm old. Number two, I'm an introvert. So the idea of walking through a trade show is my nightmare. But, if you're 30 and an extrovert, it's your heaven. People like to, generally speaking, congregate around professional and personal lives. And so that pressure is going to end up bringing back things like that.
Sure. Oh, no, I totally agree. So I'm just looking at some questions we're getting here. One is just a very simple question. The person asks for an accurate definition of efficacy. So you used the term earlier, and they just wanted to get a sense of what you meant.
How effective something is. I think it's a word. I hope it's a word.
It certainly is a word. Absolutely. Yeah, perfect. So let's see. So here, it's Tariq has a question. If I have a prototype for my product, but I don't have sales yet because it needs funding to finish it, what do I do? Make interviews with a client? It sounds like he's made interviews with a client and it's got positive feedback on if he gets it done. Does it make any extra credit? I guess the question really is a prototype stage company fundable, and what are sort of your suggested steps?
Well, so every company is potentially fundable. at every stage. The kismet is if you find the right investor at the right price at the right time. Right now, certainly in every market, US and otherwise, there are people looking to invest in technology, but the standards, the bar is higher, and the number of people actively looking to invest is lower. And that means that valuation comes out less favorably for the entrepreneur. And I think what that really means is that the sometimes useful thought process around maximizing valuations or optimizing your round are out the window unless you have a lot of patience. And generally speaking, products coming to market have a window to hit the market. So I look at it in two ways there. We don't do early stage investing, so I'm not trying to promote, like, hey, I should have all the leverage in a deal. We just simply don't do it. But we see a lot of it happening, and we see even in the best of times, founders who make it so hard because they're trying so hard to optimize every aspect of the deal that they never get to a deal. I just think you have to skip that stage now. Having said that, if this is a product that is only in your mind and you want to have the best glide path possible, I wouldn't normally endorse this, but in these kind of times, I would say if you can take a 6-month hiatus and stop fundraising and do other things and maybe continue to keep it simmering, talk to customers, do all that, it might be worth it because you are in a competitive space when no's are likely to come. No's rarely turn into yeses. So if you can change the time frame that you approach people, and this is of course assuming that things are going to get better in 9 months, 18 months, sometime, it might be worth waiting, or not quitting your job today, or doing those kind of things. I don't normally endorse that. Normally I'm like, you got to jump in, but this would be the type of time where you'd say, well, if you don't have to jump in, perhaps it's wise to keep your life sane through this period, and then hit when there's a better fundraising environment.
Yep, no, that makes sense. So along those lines, and I know your focus is an early stage, but just thinking about sort of the earlier stage companies, what role does revenue play in whether it's de-risking an investment or making an investment more attractive for investment?
I think revenue is the single most important piece. Having said that, at the earliest stages, it often doesn't exist. So people are looking at other things. They're looking at macro trends, and does this fit into some aspect of the macro trend? They're looking at teams. Are these people winners? Can I deal with them? Do they feel like they're honest and motivated? And they may be looking at comparables, different companies doing similar things. Either, do I see this business model working in China and therefore it's not yet in Turkey or MENA or Southeast Asia, and I think it could work there? Those are all great, but if you had any of those aspects positively checked and some revenue, that becomes irrefutable. It's the one thing that's irrefutable.
Right. Well, and you'd say in a competitive environment, right? So you're not evaluating a company in a vacuum. It's against a whole market of opportunity. So I would imagine that, revenue.
Bigger check. Yeah, that's what I'm saying. I think it's the most important, but we have to acknowledge it doesn't always exist. And I don't want to be discouraging to people for whom it doesn't exist yet.
Yep.
And sometimes there is you can't get there from here, meaning you can't get revenue without some funding. So,
sure.
That is sometimes the case.
The chicken and the egg.
Yeah.
So let's see. I'm just going to another question here. And actually, so actually Brock asks, how do you value an early stage startup?
Well, thankfully I don't. But when I watch it happen, the trend has been for the last 10 years to try to get out of that loop and do a convertible note so that at the earliest stage, the ideas of team and good space, the things we just talked about, don't translate directly into numbers. They translate into hunches and the willingness to back, and then the valuation comes at a slightly later stage when hopefully there is some revenue. And with the revenue, you can understand the tendency to use the product, and you can understand the cost of providing the product, and that starts triggering valuation. But it is also the case that supply and demand can have a play in this, and I would say that generally speaking, right now, the last several months, that equation works against the founder and in favor of the funder.
Right. Well, what do they say about he with the money makes the rules, right? Ultimately.
Yeah. But in other times, in the best of years at a Y Combinator demo day, there's a lot of he's with the money and she's with the money, and they don't make any rules.
Right. Well, I suppose when there's oversupply of capital, then
So I'm just saying, supply and demand has as much to do with valuation as all these other things we talk about. And in today's environment, particularly in emerging markets, it's not in favor of the founder.
Right. No, it totally makes sense. So we have Pablo asks a question. He's apparently in South America, and he recognized that you have some investments in car mobility in South America. And he wanted to ask what you think about the future of car mobility in South America.
Well, I think that there are different pieces of mobility, and automobile is I'm a believer in the long term for that. I'm a believer, in fact, in all of the mobility plays. I think that the trends were in their favor before. The real world of lockdown cities is terrible for them. But in fact, the business models, which generally are using outsourced labor and generally don't even own the vehicles, are more likely to rebound quickly than ones where if they had to have bought the vehicles or full-time employed the labor, they'd be dead. And we're going to see, assuming that we don't have a dropout completely of these economies, when people go back to work, they're going to think twice about public transportation. And so they're going to tend, if they can, to move in these directions. Now, that may be, in many markets, that may be the bus type service, the Swivels of the world, where they're going after corporates who say, I will get your employees to work safely, cleanly, no harassment at a certain cost. And that may be a less expensive alternative than hopping in an Uber type situation. I really do think that while it in certain lights, the scooter phenomenon can look a little like a flippant storyline next to the real deals of cars and buses. I think that there are niches where that can be very important for the same reason. People have the flexibility to come and go when they want, but they also have the safety factor of not having be crowded in with lots of others. And what I think there's been a continued evolution of the product meaning the scooter itself, but also the procedures around which it is secured, it is recharged, it is replaced, all the things that were kind of stumbling blocks. That none of those things can't be solved. So I'm a mobility fan. Having said that, I don't know exactly. It's very difficult country by country to monitor. We see, for instance, in Turkey, from an external perspective, it appears that the very quick uptake of COVID that hit has been moderated, and you've seen the effects of, as I mentioned earlier, a good hospital system and a youthful population, and lockdowns that are respected, and the non-politicization of mask wearing. For instance, people just do it. They're not doing it because they support one political party or doing it because they don't. So that's one that's likely to come back out relatively quickly. I don't know where we are in Latin America, but Brazil is still in the trouble category, and we'll see how quickly they can pull out of it.
Right. Well, we'll shift continents. So we have a question from Mizuin. What do you think of an Asian startup coming into the U.S. and the European market? What should we be mindful of?
Well, generally speaking, in my view, technology doesn't respect geopolitical boundaries. Having said that, if you cannot ignore, for instance, for people who come from the mobility world and the technology associated with that, which is pretty broad these days, you can't ignore the fear of some sort of espionage relationship. And so if you're coming from China and you're thinking you're going to stroll into Europe, you're going to, and maybe that works great if your product is, software to make your toothbrush more effective or something like that, or give us hair, or I don't know what. But if it's related to your mobile device and there's the chance that somebody's going to construe it as a surveillance window, you have to be aware of that. And then you always have to think about, when you think any other country, you have to be aware of data privacy trends. They have been around for 10 years, let's say, and they've moved around a bit, but they are real, and they impact how you can run your business, and sometimes that means they impact the cost of your business. And so that's real. But if your technology is a good technology that brings, I'll use the word again, efficacy to either consumers or businesses, no reason you can't try.
Absolutely. No, that's great. So let's see, we have, is it Zoria? Let's see, we are trying to establish a subservient idea to work under an umbrella of an already growing company. In an equity-based investment model, can the founder company be equated in favor of the sub idea as it is a revenue stream, or as its revenue stream is more smooth? So I guess this is a valuation question
I think what they're saying is something that we see a lot, probably more in emerging markets than we see in the developed markets, and that may be the social trends or the economic trends or position of the founders. Not sure what, but it is very often in a sort of a simple thing. It can be, we've spent the last 10 years building a great app development shop. We work for these 10 big corporations, and now we have a new idea. And this idea, we're running it as a separate business, but not completely separate. Right. And here, but we have this other revenue stream, so we're not going to go under. And how would you invest in this, and would you value this? And these are situations where I run for the hills in emerging markets. I don't see them in the US. And the reason I do that is because I have other options. I have clean storylines. I don't have to think to myself, okay, if this founder has one last hour on earth, is he going to put it into the business that pays his secretary and for his car and for his kid's school, or is he going to put it into the one where he took some money from some dummy in Silicon Valley and has great upside, but no downside if it goes away? I don't like that. And so I don't go for those deals. Having said that, many of the colleagues with whom we work in emerging markets don't have as many choices. And so they are more attuned to the necessities of the local economic picture, the cultural things, families working together. Of course, my brother is the president of that company. And it's the kind of thing we don't see so much outside of those markets. And so those deals can get funded. But even there, I think as emerging market VCs become more aware of the best global practices, they tend to say that deal has too much hair and I don't like it. And I know we're going to all laugh about when, I love hair, but I don't love hair on my deals.
Yeah, clearly other people have hair, and you and I were a little shortchanged, Chris.
Yeah.
And actually that leads into a bit in terms of a question that Brock asked, which is about vanity metrics. And his question is, when you see vanity metrics on a startup presentation, what do you do in the meeting?
I'm not even sure what we mean by vanity metrics here, but I tend to be pretty straightforward in presentation work. The reason I do that is not because I have an interest in belittling, but I have an interest in, generally speaking, the reason I do this, I've been super lucky in life, is because I like to see entrepreneurs succeed. And when we think about our value add, it's generally something that relates to helping the entrepreneur do a better job, whether it's decision making or product development or whatever it is. And so I usually call it out and say, this is not productive. You need to get out of this loop and make a very clear case about the product and the business. And that applies to so many things in presentations. I know it's part of the incubator curriculum, tell a story, all that. But my God, if it takes 3-4 slides to tell the story before I even know what the business is, if there's any revenue, is there a customer, any of that, it's not a good approach. Most VCs are, if they have the time, let's pretend that they have a lot of time. They'd rather hear themselves speak than you speak. I'm speaking to you entrepreneurs. So all of this stuff is not that useful. And they also want to know if they're really supposed to be multitasking during this meeting or really focused. And so if you don't tell them the key facts, this is a Series B, we have 10 million in revenue, right away, they're just going to start multitasking. And so you're going to lose them. It was a little bit of a side answer to that, but it is it's the way I feel.
Yeah, no, and what I heard is be direct, be clear, and be specific. Don't dance around the message, but give them exactly what variables they're needing.
Just a follow-up question.
Oh, yeah, no one else has this privilege.
Speaking of vanity, look who.
Nice.
So, Chris, you mentioned about the story. I mean, how long a story should be in a presentation to attract the interest of yourself to invest in this company?
Very short. Honestly, very short. I want to know the numbers. I want to know data. I'm not interested in, I built this company first and then I built that company. And when I saw myself walking down the street with a broken leg, I realized that there's a need for some software that tells you where the potholes are, or I don't know what. I mean, that's not interesting. I have software that tells you where the potholes are, and it's created this many less hospital visits, so insurers want to pay X. That's what I want to hear.
So which KPIs should be added to attract investors then, on the presentation?
Well, so I think we were sort of speaking about this. If there's revenue, that's the ultimate, right? Revenue is the ultimate. If there's revenue and customers, that then you can go to usage and growth of usage and how spend of a dollar or a lira or a whatever creates more revenue. Those are the key metrics. Not how many startups you've done, not I'm a serial entrepreneur, not I'm the last company I started sold for this. Those are nice somewhere in the deck, but they're not the things they're not the hooks.
And Bill, my last question. Chris, when you wanted to say no after the meeting, which terms do you use? Such as keep in touch?
Oh, well, I don't really keep track of that. I try to be pretty straightforward that the most common reason we say no is because somebody is pitching us an early stage deal, and they haven't listened to what I've said, or that happens at your beautiful event where I can stand on a stage and say we invest in Series B, C, and I can't even leave the room for 3 hours because everybody with a pre-seed company wants to talk. And that's fine. It's in some ways it's very gratifying, and it's also heartbreaking because you know that there's such a demand for insight and expertise and attention by these people that you want to give them something. So I probably nicely say, keep me informed as you grow. And we do keep track of companies that are an interesting space or with an interesting founder or have some relationship to us. But that's just our own internal organizational process, where if they're interesting enough as a startup early stage that we want to know, hey, if you're raising a Series B, we'd like to be asked to be part of that. That's just part of deal flow management. So I probably don't ever say, don't call me again. That's rare.
All right, Bill, I will be asking several questions, but please go ahead with the audience questions as well.
Sure. So actually, we have one on learning management systems, and particularly it looks like marketing of them in the moment of COVID. So Alexandria asks a question: other than social media and getting in touch with networks, what other strategies do you find most effective in marketing a product that is needed at this time of COVID, such as a learning management system?
Well, I think that really depends if we're talking about something for consumers or enterprise.
Sure.
And I would say this, though. This is a dangerous area from a valuation and signaling meaning what are the components that make investors go, wow, this is really interesting to me. And that might be some famous VC is involved. That might be, who knows what, but a great, it's a direct copycat of something really popular. If you're in an area where others have excelled or should have excelled in a time of crisis, so learning management, I'm assuming, means that in this instance, it's either school, education, where you're saying this should be the time when people are going, oh my gosh, I don't have teachers doing this anymore. I need tools to help my kids do this. If you're in this and you're telling the world you're going to exploit it and you fail, then you're really in trouble, because this should be your high cotton, as somebody might say. And so that puts a higher burden on you if you take on the categories that should be excelling right now, you better excel.
Yeah. Oh, that makes total sense. So actually, I love this question. So this is Zoria asks, is it a good sign if investors are asking questions? And what sorts of questions do they ask while a presentation, which I guess during a presentation, which may mean that we are heading the right way? So what kinds of questions would you find are good indications of interest?
I look at this in two categories. One is general topics. So if you've got an idea and you're telling about this kind of traction, and you leave out the TAM, the size of the market, then that's probably not a bad sign that somebody's asking you about that, because it's about the possibilities, the potential for the business. If they're asking you, hey, did you know my friend Tony at high school? I see you grew up in Ankara. That's probably not a great question. But the ones that I think are most indicative are those that take a point you make and follow on if it's related to numbers. So data or revenue around customer retention, minutes of use, whatever it is. Those to me are the most real signals that somebody is interested.
That's great. So earlier, so you've talked over the last several comments about sort of very tangible measures of the company's traction and what they've learned and so on. Speaking maybe a little less tangibly, but about teams, because you had mentioned the team itself as being an important variable. What are the things that, as you're hearing about a team, that perk your attention and that would give you interest or create more interest for you?
So let's start with the idea of team in the first place, because probably this is more of an earlier stage crowd, and I generally am a fan of team versus individual founder. It isn't that there's anything wrong with the individual, but it is the case that one person is sort of a picture, and that picture needs to be really, really complete if they're going to run all aspects of a business. Whereas a team, you tend to get these multiple components. Then when I look at a team, in part because I am an introvert, I love to see an introvert on the team. I think there is still a tendency to believe that the big cheerleader type is the one that can move an organization forward and convince investors to buy into the product and convince customers. And I'm not disputing that, but I think particularly where there's a team, extroverts tend to sit in a pitch meeting and pitch. And they don't listen at all. And they don't have any sense of whether their pitch is resonating, and they're not really hearing the questions because they're pitching. And the introvert tends to, these are generalities, be more of a listener, and therefore is actually sensing what they asked, why they asked it. And that is powerful. And that's powerful not just in a pitch meeting, that's powerful in a customer meeting, where you're not telling the customer they want your product, you're hearing what the customer needs, and maybe you're changing your product to match that. So I like the combination of an introvert and an extrovert, if you can find it. I think there's some really good empirical data around gender diversity being a positive. And fortunately, in the markets where we do business, and I'll focus on the emerging markets, you really have good access to education for, or let's just say this, you have the same access to education now, good or bad, for both genders. And the trends that existed in many of these markets to, educate the male and not the female are just, you just so rarely see that. And that's great, because that just means that everybody is part of the picture, and increasingly so.
The diverse team, and I would imagine diversity is male, female, skills, probably on every perspective.
And when we look at the teams that do well in emerging markets, they almost always have some global flavor, and whether that's from two different countries, or somebody went to school here and somebody, grew up over there, or, I visited my uncle in Ontario every summer because he has a Canadian sister, whatever it is, that global input is very useful.
Right. Well, I'm so glad you had the comment about introvert and extroverts, because I was going to ask you a question about ego and the role of ego in whether it's pitching or in being a successful entrepreneur. Obviously, without ego, quite often we don't get out of bed, and we would probably never commercialize an idea. But on the other hand, as I think you so well said, is you stop listening, you make assumptions, and you have your own narrative, and you're not empathy based in terms of your communication style. Are there any additional comments you would make on sort of what you've seen?
I'm not a psychologist,
sure,
but I do think these categories, as we talk about ego, there are plenty of introverts with a healthy ego.
True.
So you're right. You need some motivation to move the ball forward, and ego is a perfectly fine one. Egomaniac is not helpful.
Are you talking about any leaders in particular, Chris? I'm kidding.
Who runs this program?
I don't know.
On the screen sometimes. Let's see if he comes back.
He'll be back.
Yeah. No, but I don't mean anybody in particular.
There he is. We knew he'd come back. So yeah. I have one more question, and I'll turn it back over to Barack. And that is, what's a question that you think about often that you rarely get asked? In other words, what's a question you wish that entrepreneurs asked you that it just, for whatever reason doesn't happen?
I think that where I think it's important for us when we invest to know that we can add value. We're not interested, or at least personally, I'm not interested in being passive 100% of the time. Doesn't mean that we need to sit on boards. It doesn't mean that we need to run the show. Far from it. But where we have expertise, we'd like to be involved. And so I rarely get asked for, let's say, a reference to other companies you've been involved with and how you are able to add value. And I would think that would be important to entrepreneurs.
Right. No, that's perfect. Thank you so much. And this was fantastic. I know from the responses we're getting online here that there were a lot of really great points that you made that I think really resonated with the audience. But Barak, I
have a sum-up question, close-up question. I mean, which means also related to the previous one.
Speaking of bald men.
So with the COVID outbreak situation and Zoom economy, let's say Zoom economy, and also the situation right now in US about the riots and also protests and the situation, a political situation. How will the Silicon Valley mindset will shift in upcoming years?
Well, I think that the overall mindset, if we're talking about investors or the technology companies in general,
both.
So sadly, I'm old. Equally sadly, I've seen other instances of political unrest, particularly built around sort of what we might consider human rights, whether it's guns, race, gender, where we do tend to display our unrest and our upset, but we don't do it to the point where we undermine our political system. And I don't think it's going to happen this time either. And so ultimately, people get back to the thing that puts bread on the table, and they, or education in their kids' lives, or, helps their mother get to the hospital. I mean, they have lives. And so sadly, some of these things tend to fade away with only incremental impact. And I'm talking particularly right now about the race demonstrations and protests. I do think, though, that the timing of COVID and that type of bad acting in our police system is likely to have hit at a time where the Trump team is going to have a hard time pulling out a win. It has shown the weaknesses that were always there in their worst light at a time that's quite close to an election. And so I do think that will change. What that probably means is less change in Silicon Valley, because Silicon Valley is sort of a liberal bastion by and large. And while there'll be the influence of the sort of liberal politics should be on the ascendance, that's not going to change Silicon Valley. That's going to make Silicon Valley just as comfortable as ever. And so I don't see massive change. I certainly see what we've all said, the sort of digitization of life will have been accelerated. It's already happened. We're all doing this with no problem. I don't have to be on a stage in Istanbul. We don't have to be holding physical microphones, none of that. And so much of that will take hold and stay. That was coming anyway from a population a bit younger than all of us, or the three of us. And so that is a change, but I consider it more of an acceleration than an actual change, of course.
That makes sense.
Good.
And very soft answer, political answer. Thank you very much, Chris. Thank you very much, Bill.
Thank you, Burak. It was wonderful.
Yeah, fun.
You, Chris.
Chris, thank you very much again. I mean, we are always happy to host you back, and I will send you another email, hopefully upcoming months, to call you back.
Great. Good. Be fun.
Thank you. Have a great day.
Take care.
Have a nice weekend.
Bye-bye.
Cheers.
Bye-bye.
Bye now.